Good morning. It's Vijay here. Today is Monday, 9 December 2024. Welcome to yet another episode of Pre-Market Commentary. The title of today's topic is Volatile Ahead in December. Markets are always volatile, but I think December will have greater volatility. We have seen what happened last week, and I think we will continue to have it more as days go by. For many reasons, there are a lot of events lined up in this week plus next week, and also as the month goes by, the volumes reduce a little bit, not too much, but reduce a little bit, and also positioning is done by the what we call operators. On Friday, for instance, we saw that there was a lot of volatility in the first 1 hour after the RBI announcements. Then the volatility died down, and it was almost like a calm before the storm. One of the other reasons which we saw huge volatility on Thursday is what I would think was the straddle writers, call writers, put writers. They took probably larger positions than what is normal, so they lost heavily. So you have a trader who is small and who's got an account size which is small, but then your lot size is very huge. So this is what happens if you are not capable of taking large, lot sizes. You should not take it. But then greed overtakes, especially when you begin to lose. On Thursday, for instance, both call writers and put writers lost. I don't know whether call buyers and put buyers made money because mostly the buyers are weak guys. At the end of the day, I think it was quite a problem for a lot of experienced traders, especially the writers. And writers are supposed to be the smarter guys. So why do I think there will be a lot of volatility this week? The US CPI data on 11th will tell us whether Fed will really reduce interest rates next week. But I think more or less right now it has been decided. I mean, the market thinks that there is more than 80% chance that the Fed will reduce interest rates by 25 basis points. Then there is an ECB meeting on 12th. Now, while rate reduction was a foregone conclusion, now people are talking about whether the rate reduction will be higher than 25 basis points. So that will create more volatility. Then we have India CPI inflation data. RBI has already warned that CPI is going to be high. So there could be some volatility because if the CPI data comes lower than what people expect, and right now people are expecting higher numbers, then there will be, I think, a lot of volatility because positioning will be there for a larger number in CPI. IIP data, which is generally inconsequential, but still that is very important, that also can turn the tides. So where do we go today morning? Nifty closed around flat, as I said on Friday. Not much after the 1 hour, 1.5 hour volatile movements in the aftermath of the RBI policy. So, but small caps hit 2 months high. I mentioned yesterday that small caps, micro caps are doing very well. So is HDFC Bank, and so is HDFC Bank closed lower on Friday, but still, and so is the IT index. So metals have now started gaining steam. Vedanta and Hindustan Zinc led. Then PSU Bank hit a 4 month high. Bank of Baroda, Canara Bank were doing well. Canara Bank is going to divest its divisions in the near future. That is before the financial year end. So there is a lot of interest in Canara Bank. Incidentally, we hold Canara Bank. And again, I repeat that we are not SEBI registered advisors. Whatever I talk here is purely my understanding of the markets and analysis based purely on my capabilities. FMCG advanced for the second session. FMCG has not been doing too well. I think FMCG may be one of those sectors which will underperform the market as per my analysis. IT came down. It's been going up too much. It made a all-time high just recently. Pharma is being very tricky. It closed in the red. Realty declined for the second session. Realty should do well in my opinion. We don't have any stocks in Realty, but that is what I think. Nifty Bank, which was going up five trading sessions consecutively, broke and came slightly lower. US markets closed higher on Friday. S&P closed at 0.25%. Nasdaq closed 0.81%. Both of them making all-time highs. Dow Jones closed little lower. And 10-year Treasury yields, you look at it, recently it was 4.4, now it is going up to 4.15. I expect Treasury yields, US Treasury yields to break 4 in the very recent, the very recent future. Two-year Treasury yields fell 5 basis point. 2-year treasury yields is where the Fed can control the yield, so that is going down faster, which indicates that market is looking for a rate cut. Spot gold did nothing much, so it was marginally higher. Silver also did nothing much. Then this is about Biocon. Biocon has got a voluntary status. That is the from US FDA. This is a good thing, but this has happened, I think, between September 23 to 27. So I think not much may happen in the price movement, but nevertheless, that is the good thing for Biocon. What is it called? VI status means you have to take voluntary action needed. So basically, that is going to be good for Biocon, but may not be immediately. Then this is what I was talking about on Reliance. Motilal Oswal talks of compelling risk reward, and the free cash flow generation likely to pick up, and tariff hike is there. As far as Geo is concerned, Reliance retail growth recovery is happening, because what is happening is Reliance retail caters to what I would say the lower middle class primarily. So that is where the growth is coming from, and refinery margins will increase because the oil prices are coming down, and I expect them to come down to around $65 in the very near future. And then the new energy. This is the best place to utilize economies of scale, which is what I mentioned yesterday. Not only hydrogen, we are talking of solar, and they are leaders in both of them. So these guys talk about target of 1580. I don't have any targets, but we hold Reliance because we believe that this is a bargain buy at this point of time. Gift Nifty shows a weak start, primarily because I think RBI cut the interest rates. Sorry, RBI cut the growth targets, as well as they increase the inflation target. So that could put a shadow on that. So how did India do for the rest of the week? We were number 2, 3, 4. DAX was number 1 with 6.5, and we were Bank Nifty was number 2. Shanghai was the lowest, which all of them gained. Dow Jones gained, Hang Seng gained, Nikkei gained, but we were the Bank Nifty, Sensex, and Nifty we were in the top 4. So that is very good. And then, however, the recent market moves, if you take from 21st November, which has been the recent low, the Nifty has gained 5.69%, Bank Nifty has gained more than 6%, Sensex is about 6%, mid cap is 8%, and small cap is about 11%. So that is what the markets are doing. People are still thinking that we are going to see lower numbers, but as of now, as I look at it, as I've been mentioning, I continue to be bullish, especially December. What one should be careful is the volatility will increase, because a lot of people are doing revenge trading, is what I understand as far as anecdotally, and that may create more volatility. And also, RBI has put its spanner in the works when they have reduced the growth rates without even apologizing for the kind of growth forecast they did. In fact, this is the third time I'm seeing in the last 3 years where RBI came up with very positive, bullish growth targets, and then quietly reduced it, and nobody looked at it, and yet the RBI governor gets the best banker award. Then I don't know what the worst banker award, who will get it, because in my opinion, they're getting it wrong too many times. I think they're getting it wrong in terms of growth. But finally, we have to live with the system, and that's where we are. I go into the day. Today is a free day for my Market Mirror free Telegram group, where I show in my trades, and these trades are my own, so it is not no advice. Please take it with a pinch of salt, or maybe a truckload of salt. So I go here with a bullish, slant with BTFT, knowing fully well volatility will be there significantly, not only this week and the following 3 weeks. Thank you for joining me.